So when I blew up my account after that into the summer, I was going into my senior year, and I really had to take time for myself to recoup and really just get a grasp of like my head, because everything was spinning out of control.
So you made and lost 80K. Is that correct?
Oh, just about. I think I was down to like 14,000. Man, then December 2019, I was at TCU down in Fort Worth. I drove over to the Cobra brokerage office and gave them like the remainder of my account and like check form. Like, you can mail it, open me an account. And then, then I started shorting again. Little no luck. Massive volatility comes back. Next thing I know, there's so many people that just don't know the rules of trading and they're just getting dumped on every day. And it was right back to business with the gapping craps.
You're listening to the Steady Trade Podcast. The Steady Trade Podcast.
Welcome back to the Steady Trade Podcast, everyone. I am Tim Bowen, back with my co-host, Steven Johnson, and we've got Jack Dan / Jack Schwartz here today. Got a lot to talk about. Jack's been really crushing it lately, and then he's got an interesting kind of approach to trading, a little bit more of a quant type idea, so a little bit different than we've talked about. Most of the stuff we talk about a lot of the time is, Steven's just blindly shorting any stock that's up more than 1.5% on the day. And then I'm just looking to short, or I'm just looking to buy when he covers his short and then sell higher. So, that's been about 200 episodes of the Steady Trade Podcast. So Jack's got a little bit more of a sophisticated approach, and we're going to go over that today. So welcome, Jack. Welcome, Steven. Let's get right into it. So
let's do it.
Just a welcome, Jack. I think you started out in 2016, if I'm right.
Yep, back in February.
I think I'm about a year behind you and stuff like that. So I'm just curious to know, like, how was your journey? How are things progressing? How did you start out? And I also, if I've done my research properly, did you blow up an $80,000 account somewhere along the way?
Oh yeah. Just 2019.
Yeah, I just love to hear the story, hear the struggle, because like I blew up a bunch of accounts too, and just to get the truth. Do you know what I mean?
Yeah, totally.
Trading sucks sometimes, and it's hard, but it's very rewarding in the end.
Dude, I know. Like, sometimes trading is just, I can't even stand it. It is like the worst thing in the world. It's a lot of fun, has some great benefits, but it can really just twist your mind up, and that's really actually where I went wrong with my blowing up. But kind of back to the beginning, it started in 2016 in February. I had a $2,000 account, and I was always very well risk managed. I would make sure to only lose like $20 a day or like $30 on a trade, something like that. And I can really attribute that to the longevity and like how I was able to stay in the game and keep, I mean, I guess coming back for more punishment, it turned out. But I mean, staying in the game, that's first and foremost the number one thing you need to do when you're starting out. I mean, I pretty much bled that account down into 2017 January. I nailed my first big trade, which was DFFN at 4.2, held it overnight, and then I sold it into like 13. I made like $800. It was like a 220% gain. I still have the picture somewhere. But like having something like that, that's kind of what taught me the potential, saying, okay, I wasted nearly a year to finally hit a really good trade, which almost put me back in the game. But if like you
that's the cool thing, just right off the bat, is if you could, that's the point I do want to make, and I'm the king of interruptions, by the way, but I want to focus on that point, because to all those out there listening, I mean, the reason Jack could do that is because he took $20 losses for a year. I mean, if you take, $500 losses, you're done in 2 weeks. And then here he says one trade almost puts him in the black, but that only works if you got the $20 losses, the $15, the $30 loss. So go ahead.
Oh yeah. But seeing that potential, and then I developed like a desire to just kind of replicate something like that. Cause I'm like, okay, so it is possible to really make an insane amount of money, because it was a $350 position, $300 position, and made nearly $750 on it. But then I bled that account down, and then I wrote that account off. I'm like, all right, that's blown up. I got to re-up, get back after, and keep working, because I always believe that if there's a will, there's a way. I mean, there's other people crushing it. Why can't I do it? I just got to adapt and figure out where my biggest flaws are. And I will be honest, my whole background does get a little foggy just because I've bled so many times and I've just suppressed those memories. But let's see, enter college. I was a senior in high school when I started trading.
So
Entered college.
real quick, what got you started? Like what was,
Mhm.
I'm gonna open a again, because
Oh yeah.
this is 4 or 5 years ago. It's, I like to think it's still not quite, it's nothing like today. I mean, geez,
Oh, yeah.
I mean, you stop any 18-year-old on the street and you're like, hey, you got a Robinhood account? And he's like, yeah. So
I wake up every day for the market at 9 o'clock Eastern.
yeah.
All right. So I was actually like in the bathroom scrolling on Instagram, and I come across Tim Sykes's post, and I'm like, oh, that's sick. He just posted like a supernova of, I think it was Ford, FORD ticker.
Yep.
And I'm like, that's insane volatility. I'm like, why don't more people do that? And like I said, if there's a will, there's a way. It's clearly possible for somebody to buy into those like parabolics and make money. And then couple that with senioritis. I didn't care about school, didn't want anything to do with it. I was on the lacrosse team, and lacrosse is a spring sport. I stopped going to practices because I'm like, okay, lacrosse is a dead end. Even if you make it to the pros, there's no money in that. So that's why I started trading. I'm like, I have free time. Let's use that free time for something. I'm trying to make something work. So that's how I kind of really just got started. And then, so where are we? College?
Yeah. Yep.
College, it was just grind season all the time. And then we'll kind of fast forward because that was more of the same, just getting into a hot market where there's massive momentum in a sector, and you make insane amounts of money, like $1,000 here, 1,500 there. And like, that's really big for the account. But then what happens after the market shifts and goes quiet? You start to bleed out again because you don't have like a proper risk management adjustment process, because there's one market where you can risk like two R on a trade, and in another you have to only risk 1 R.
Yep.
So
And then sometimes, I mean, like, you look at even, we're kind of in that chop fest right now, but you look back to a month ago, and I mean, like, everything came back too. It's like, I mean, especially as a newbie, even if you make bad decisions, you can make money during the times like that.
Oh yeah.
This last week, I mean, nothing comes back, and it's just, and so you have to stick to those stops.
Mm-hmm.
Can I just jump in quickly with a random question that might ruin the flow and the interview, but just doing my job as a great co-host. Something that took years for me to figure out is to only put size on the best opportunities and to just sit quietly for the rest of the time. I just want to get your opinion on that. Like, is it a case of just waiting for an A+ and then sizing big? Because you see Jack Kellogg does that.
Oh yeah.
I see some other guys that do that. Do you do that? Is that some hidden secret?
So when I was really getting into the flow of like building my account, you're kind of in the boat with all these other Robinhooders where everybody's just pushing on every single opportunity, and it was working out both long and short side. But ever since, I guess after the GameStop crash from 400 back in like January, February 2021, that's kind of when I began only waiting for just the perfect opportunities defined by my criteria. And when those come around, I'll be able to dump size because I know it so well. And that's all I care about, because you hit one of those opportunities and you really I don't feel a need to trade anywhere else with big size.
So the rest is passing time, waiting.
Yeah.
Grinding a bit here, grinding a bit there, but the money comes from the odd trade, the big one.
Yeah. Kind of like in, when it rains, it pours, right?
Right.
That's usually how I see.
Beautiful.
So, market flips, all your setups are there. I'll be there pushing every day. If it's quiet, I will trade maybe like 1/10 of the size I like to trade, and then I'll go work on my car or something.
Yep. Yeah, and I think that's something that Stephen and I, in the podcast and over again, we push that idea of, and again, you've mentioned several things that it's like staying in the game, because and I'm assuming you'll agree, but it's like, you got to find that 1 or 2 setups that are your core setups.
Yep.
And I mean, you can't do that in a week. You can't do that in a month. And again, if you're too aggressive and you're too oversized, back to, like you said, number one thing is staying in the game. you'll never know what your best setups are if you're done in a month. I mean, you just can't figure it out. I don't care how much data you track. I don't care how much time you sit at the computer. You can't do it. So that's I think is so important. And people, they just want to press too hard. They want to make too much too fast, and so on and so forth. So
yeah, and I mean, I get it. Like it's
right.
It's a very attractive idea. You just pick up trading, you make a ton of money, and then it's like, oh, sayonara, real world. But it just can't work like that. If it worked like that, everybody would be retired, right?
So how long did it take you to kind of find that, your A+ setups, your core setups, et cetera?
So I was always like studying just the short selling side, even from the beginning, because that's usually like all the content you see everywhere. And it wasn't even until like Roland Wolf where I actually discovered how to build a long account. And that was once I was already a couple of years into trading. But I did that, build my long account, and then I flipped to a TradeZero broker account. And then from there, it was kind of just history. It was March 2019.
Okay.
And I mean, I just pushed everything. I really didn't have incredible risk management, but I was just pushing every single gap because that was one of those cycles where every gap just flops, and it was incredible. So I built that from like $5,000, $6,000 account into about 80,000.
What year was this? Because I think I did the same thing.
2019.
Right? Yeah,
2019. Oh, it was insane.
A beautiful year. Very, very easy strategy. Short whatever pushes.
Literally any gap. It was just awesome.
Yeah, that was a good year for gap crabs. Yeah.
And then I got onto one like, I think it was like OBLN or something. It was like a gap into the dollar range. It became super overcrowded, then just ridden with algos. And I was just trying to like slam the gapping crap. It didn't work for a few times. But instead of just walking away, I just kept pushing. I'm like, oh, it'll fall. It'll fall. And it wound up going to like the $3 over the next couple of days. But that's really where I took the big loss in my account. And then from there, my risk management just got sloppier and sloppier as I went down that whole downward spiral with it.
This sounds more or less where I am right now, Jack. So
downward spiral.
What? No, I mean, I'm doing all right. I've kept a lot of what I've made, but your story is the same as mine. Just you're in the future. You're like the future version. So I did the gap and craps. A couple of them stopped working.
Oh yeah.
Then it spiraled. So what happened next? Because it's like me talking to the future me.
So when I blew up my account after that into the summer, I was going into my senior year, and I really just kind of said, I just can't trade right now. I was so sloppy with everything. So I really had to take time for myself to recoup and really just get a grasp of like my head, because everything was spinning out of control. I'm like, okay, I'm going to graduate in a year, and I just lost all the money I worked for. This is not a great situation.
So you made and lost 80K. Is that correct?
Oh, just about. I think I was down to like 14,000. But like I said,
that's so tough. That's so tough to take.
Yeah, it was. It was terrible.
It's so tough.
Terrible, man. And then December 2019, I was at TCU down in Fort Worth. I drove over to the Cobra brokerage office and gave them like the remainder of my account in like check form. Like, you can mail it, open me an account. And then, then I started shorting again. Little no luck. Massive volatility comes back. Next thing I know, there's so many people that just don't know the rules of trading, and they're just getting dumped on every day. And it was right back to business with the gapping craps, where I built my account up to finally breaking the 100,000 area.
Beautiful.
And then I started diversifying with all the other strategies that I knew. And I'm kind of just rotating between patterns now as cycles change.
Can you give some of those patterns? I mean, I'm going to guess that you've thrown the first red day in there because that's a standard one, especially on the multi-days. But can you give like some of the patterns just generally?
Okay, some of the patterns. You obviously have like the day one gap and fades. But oftentimes those get so overcrowded now that it just doesn't work.
Anymore. Doesn't work.
No.
Yeah.
I'll maybe take a morning panic on it, take like a few thousand, then move on.
Yeah.
The best fades are going to be the ones that are just really chilling, and then the volume's kind of down. Like for those, it's not really a pattern for me. It's more of just like the data that I have on it.
Yeah.
I could honestly trade it without even looking at the chart. Just based on like the time of day and
Right.
the volume push. I'm like,
Well,
all right.
that's it. You know, again, I know I'm the old bastard here, but you know, it's like I think back to, you know, I tell this story all the time, you know, 2007, 2008, 2009, that first 4 or 5 years of my career, it was like you could almost do, like you said, you could almost trade without a chart, because if you gave me a ticker and just showed me the volume, I'd short it and they'd all die at the end of the day, and they would all gap down, because if that thing wasn't building volume, it was over, man. And again, it's just I mean, again, if there wasn't, you know, I always talk about that kind of, you know, you got that like that U-shaped volume. And if you're heading in the afternoon, I could, you know, I didn't at the time, but thinking back, I could have traded with a volume chart and a ticker, because I already knew it was the big gainer of the day. Okay. And if you just showed me the volume, unless it was hitting like big volume candles, it was over. It would close on the low and it would gap down the next day every single time, every time.
Oh yeah, Tim, didn't you that was you with the midday VWAP hold? I think you're the one that exposed me to that. Yeah.
Nice.
That was also my like log strategy, right? The heart of it. It was one I could always look for and like kind of figure out, find a risk in it.
Beautiful.
Yeah, that was
beautiful.
awesome.
You know, it's a simple pattern, but that's, you know, that's again what we're trying to do here. We're geared towards, you know, newer traders, and, you know, and that's to the listener out there. I mean, it's like you start with that. You start with these simple things because, you know, again, I think so many people overcomplicate things. You know, you start with as simple as possible, and then, like we've said, or I've said 3 times, stay in the game. Then you start to diversify. Meanwhile, and listen, I'm as guilty as anybody. Back in 2007, you try everything, man. It's like you're again, I was shorting junk late day faders that would, you know, basically the opposite of the VWAP, hold the VWAP fail, you know, and there wouldn't be one. So then I'm shorting freaking large caps and, you know, and doing all this trade. You know, my biggest loss career date was trading FAS or FAZ. I can't remember which one, but the 3X ETFs, because I'm like, well, there's nothing to short. So then I take the biggest loss of my career on a 3X ETF. I don't even know what the fuck it does. I'm just like, I just wanted action, you know.
But Jack, I'm just curious, like, because this has happened to a lot of traders, right? You found a pattern, you made a lot of money, it stopped working. What did you do?
Great question.
Okay, so yeah, actually, like I said, with the gap and craps, they start getting so overcrowded. Like there'd be 20, 30 million shares a day. And that was like the low end of the, the like data. It's like, you see 50, 80, 100 million plus. And it's like, what the hell? But I mean, when you see that, it's like all these algos, they're just looking to pretty much front run you.
Yeah.
I don't know. It's terrible. Yeah. So, I mean, you just stop doing it. And then those would also be the stocks that would do the moves like, there's like SCKT where it just spiked from 4 to 30 in the same day.
Yeah.
So then I started diving into these aspects of, well, why don't I just wait for everybody to get ripped apart? Because you don't lose money by sitting on the sidelines.
Well said. Yep.
You can't lose money doing that. So then I would start cleaning up after everybody gets blown out. And that would be one example. Or even, what was the one earlier this week that traded like 100, 200 million? I don't know, ticker. I didn't record it, but I made like maybe like $1,000 on it yesterday. And like it was a small trade. It was probably like 10-cent gain or 15-cent gain. But so yeah, you just pick up the pieces from everybody else after it.
Right. Yeah. Right. I mean, Steven, you know, that's what you're trying to do right now, right? I mean, they're waiting, you know, you're trying to be patient. You're waiting for that, you know, looking for everybody to talk about blowing up, then you want to enter.
I mean, sometimes, but I'm almost looking, I mean, the market's just not what it was maybe a few months ago, but I'm thinking like, if shorts are getting drawn down 40 to 50%, why am I waiting when I can be long? Taking 40 to 50%. So I'm kind of looking the other way on it.
Yeah. And actually that's where like all my long gains come from now. It's because I know when like shorts are really screwed. So just like smack the buy button.
Yeah. You know, and I think there's value in that. Again, you know, that back to my bio. It's like I recognize, I mean, you know, and obviously this podcast isn't about me, but I've told that story a million times. It's like 2014, 2015, I'm just like, this is not working anymore. I'm like, I get stopped every fucking time. I'm like, this didn't used to happen. And then that's where I started, tracking data, keeping an eye on these things. And then I flipped the switch in 2016 because I'm like, man, I'm done making 5% when I can make 50, 60, 100, on these moves. And again, not guaranteed, but it's like, it changed.
Oh yeah.
So
Certainly did.
But I mean, just one final thing I'd like, shorten at 9:31 on a first green day. It's just not a thing anymore. Like, it's just not a thing anymore. Unless the stock's like 4 million pre, 500,000 in the first minute, then it's a thing. Then you don't need to look at the chart. But
yeah, like LMDX. Today,
Yeah.
I probably shorted that like 932, maybe added a little bit to my position, but
now I
other
will
than that,
add
like,
in that, EDSA and that. I mean, again, COVID PRs. It's like, I mean, listen to those out there. If you hear this podcast soon, like we're recording in October 2020 and you want to short stuff, beg for a penny stock with a COVID PR. Cause I mean, EDSA yesterday destroyed, LNDX today destroyed. I mean, that's like if you can find one, that look for it. So.
Oh yeah, but as far as like leading gappers go, it's not even worth like trying to short. You always got to wait for somebody to get pushed out. Otherwise, just don't even worry about it.
Yeah, no, and it's a tough lesson to learn, right?
Mhm.
It's a tough lesson to learn. You need to take some losses, and then and eventually you learn. I mean, but the one of the main takeaways I found, and probably that you found, is don't get married to a setup. Just accept that it doesn't work anymore.
Yeah. Oh yeah.
So what were the setups that you kind of evolved into? What was the first setup that you'd like kind of learned that got you away from the gap and crap, or that other than the gap crap later?
Yeah. So one of them was like overextended gap downs, but like it's not really I don't know if it's not like an official overextended gap downs, but it's just like a massive exhaustion. Like people don't even want to trade the ticker anymore because they're so
To the long
sickened by
side.
it. And but like it'll gap down like 30%, but I mean, you can really short into it and then it's going to fall like another $3-4 and then you can pick up the pieces there. Another one is like the super massive blowout low float moves. Those ones are some of the best for me, both on the long side and short side. Cause I don't know why I see it the way I do. I tell people about it real time. They're like, you're an idiot, you're crazy. And then like, I'll make money long and then I'll make the money short, like at the top. And I'm like,
it's experience, man. Again, it's like, and that's where, I respect. I mean, it's again, you, how old are you again?
23.
You're 23 and you're freaking 4 or 5 years in, man. You spent a fifth of your lifetime, in this. And so it's like, and so when people are like, oh, I don't get it. It's like, they probably don't have the seat time you have. I mean, again, that's incredible, shit. So,
and that's what I attribute to like understanding just like how the market's cyclical nature moves, because like, even in college, like every single day, there would maybe be like 2 hours or 3 hours throughout the day where I wasn't watching the market, but that's because I was walking to class and looking at it on my phone.
So what is that level of obsession to you? Because a lot of people like will say that they work really hard and it's so easy, right? It's so easy to be like, oh, I work so hard and I'm so dedicated and brains.
I always love when people are like, when people are like, obviously I'm a big reader. I that's one of my big habits. But people will be like, man, I'm working so hard. And I'm like, well, hey, here's like a book. And they're like, well, I don't want to read a book.
Yeah, no, but there's a good quote.
And listen, I'm not saying books are the path to success, but don't tell me you're fucking working so hard and you can't take 6 hours to read a book. It's like, you ain't doing, you're sitting there dicking off on Twitter all day long. It's probably what you do.
Oh yeah, like even when I would work out at the gym, I'd always have like trading audiobooks on. I'd just be, I don't know, just be doing it all day.
Yep. So
can I just ask, like, when a lot of people say the grinding, it's a term that means a lot. It means a lot of different things to a lot of different people. So like, what does actual grinding mean to you? Like, if you say you're grinding, what does it mean?
It means to me that you're exploring everything. You're not just exploring your strategy, but you're exploring the counterparts that would like break your strategy, for example. Like you got to look at the losses in a certain setup that you like just as much as you look at like the good in it. And then even that you have to look at like other different angles. So you have to communicate with like probably other traders, or even scroll on Twitter and see like other people's charts and like think, what were they thinking here, you know? Because a lot of people, they just want to sit and maybe watch like a couple video lessons, but like you have to think, why is someone saying what they're saying? Like,
Right.
what do they see?
And,
You know, I
and how
mean-
many hours is that grinding? If you're grinding a day, how many hours are you grinding?
Oh, back when I started? Or like
Yeah.
nowadays, because nowadays it's not as much anymore. But back when I started, it was probably like, I'd wake up around like 5:40 or 6 a.m. I'm in Central Time, so that's just like right when pre-market opens standardly. And then I'd be studying all morning, then I'd trade for the morning. Probably study midday, trade again. I pretty much wouldn't get to bed till around 12 or 1.
Nice.
And by then I would just like have my laptop on the floor, still looking at something, I'd just fall asleep.
So in essence, at the end of the day, you were, you know, in my opinion, you were spending as much time as you possibly could. I mean, ultimately,
Oh yeah,
you had to pretend like you were going to class a little bit, you know.
oh yeah.
You had to get to class, you know, but at the end of the day, you were spending as much time as you possibly could.
Well, that was actually the summer of going into college.
Okay.
So everybody was going out to grad parties and I would just kind of would hang back and do my thing. And then in college, it was more or less the same thing. I guess I would even study on like Friday and Saturday nights.
Nice.
I'd like walk my Chick-fil-A back to my dorm and just get after it.
So
mean-
now, you know, something you've mentioned a few times is, you know, is data tracking, is reviewing, and that's something we
Mhm.
really push. And, you know, everyone does that a little bit differently. So, you know, when you're talking about tracking setups, when you're talking about reviewing, you know, give us a little insight into your process there. Cause, you know, again, everybody's is a little different. So I like to, Steven and I, you know, we kind of like to expose people to different stuff.
Mhm.
So.
Yeah. So I have two different forms of tracking. One is like purely price action, and then the other is going to be volume based tracking. So let's see, where do I start with this? Like for a certain setup, like a day one gap, I would always take like pre-market volume. I'd take the pre-market high, you can kind of do pre-market low, but it gets a little kind of iffy when you're just reviewing it later in the day. But then you would take the volume, and then you take the open, then you would get all the extremes. You know, I would always do like the first minute, second minute, high and low. Then I do like 5 minute. It goes on and on for how many I take.
And you do it like a spreadsheet by hand? You know,
Oh, it's all spreadsheet.
okay.
I heard about like, what is it called? Speakeet. Apparently they're really good.
Yep.
Every time I
they're
try to
kind of one
use
of the
it,
new ones. Yeah. Yep.
I
So-
must be like an old boomer or something because I can't figure out how to use it. It's so they offer help, but I just keep forgetting to email them. But yeah, then when I have like all this raw data, then you can kind of dive into the statistics in it. So it's like, if there's X threshold of volume, like 15 million shares trading pre-market, what is the percentage probability of a 10% like bullish push? You know, because then when you have those like quantifiable numbers, then the pattern would show up real time and you could say, okay, I mean, I can get the borrows, and every 8 out of 10 times, you'll get like a 5 to 10% push over like the open high or over the open price. And so then you can kind of like, you just
Yeah.
dive it into statistics, and
But
then it
I
either
know,
works or it just fades.
I know exactly what you're saying. And there's a lot, like say 95% of traders fail, right?
Mhm.
And it's the losing traders. And it's funny because I bet you if you set it like all of the 95% or the vast majority, say, all right, what's your setup? And they'll tell you your setup and say, all right, and do you have like at least 200 samples of data?
Yeah, I know where you're
Mhm.
going.
And with the 200 samples, what are your findings when you've interpreted that data? And I bet you they can't get through all of those questions. I bet you they can't.
No.
And so it's not like rocket science. It's just you've got to take the steps, right? And
Oh yeah.
and the frustrating thing is, like, say for example, for me and maybe for you, I tracked like 500 gap crops,
Mhm.
worked super well, made some good money, and then it stopped. And now you're at the point. Well, all right, then now track
yeah.
the next setup and the next data. Do you know what I mean? And that's just the game.
Oh yeah. Yeah, it really is. Really is. And then overextended gap down is probably my favorite. I actually never tracked data on it. Well, actually, okay, I tracked a little bit, but then I just understood how the pattern moves and all the possibilities in the pattern. So even if I wanted to track data, I guess I wouldn't have every single possible like example, just because the overextended gap downs have been so much different than 2 years ago, in my opinion. Because then you would just get these crazy grinds up that would even push green, and it would be down like 25%. Then just go all the way up. So I haven't been able to track like that variation of the setup.
Yeah, I mean, for me with the overextended gap downs, and I'm not even the IO level, but it's just a case of accepting its backside and shorting, cutting, shorting, cutting, shorting, cutting, and just figuring out that the top's going to come because the trade is backside.
Well, and I think that goes back to that staying in the game because again, I'm assuming you guys will agree. I mean, when you're new, you never want to let go. It's like it's that whole ego thing.
Yeah.
You don't want to be wrong, but I mean, if you can evolve and you can grow to the point where it doesn't bother you to lose 100, lose 100, lose 100. 3 times on the way up, and then you nail the back and you make $1,000.
Yep.
You're up 700 on the day. But the problem with the newer traders is they don't want to take that 100 and take that, and then worst case scenario, they're adding to a loser, and then instead of losing 300, they're losing $3,000 because again, they haven't been around enough and they don't know that, okay, if I take these paper cuts, and worst case scenario, I take 3 paper cuts and the thing doesn't SCKT goes to 30. Well, at least I lost 100. I wasn't adding into that, and again, that's where it just goes back to, I think, again, if you can back to the beginning of your story, nobody wants to sit there and lose $20, but I think that's the key. Or what? Listen, maybe you start with a $20,000 account, you're losing 200 or whatever, but nobody wants to do that, and that's why nobody's here 5 years later, 23 years old.
Oh yeah, definitely. That's actually kind of funny. That's the situation right now because I'm in a trade at the moment, and it's just grinding up. I'm like. It's just HX.
Dude, I'm in HX right now, and it's grinding up.
I
got an order ready at 11, motherfuckers. If that thing gets there,
are you, Jack? As a multimillionaire who can give advice, like
if it breaks 11, I'll take it, man. I'll take it. I'll risk $500 at 11.
I'm holding HX because I'm like, this should roll over. It should be backside. It's just parabolic off its highs the day before. All the shorts got squeezed out.
It is, but the volume, it's just so
high.
low.
But it's high in comparison to the.
And Steven, that's why, Steven, I know you did well this morning. And that's what I said. I mean, the volume. I mean, at 9:15, it was trading like 1 million shares. I mean, you heard me. I'm like, man, if that fucker was trading 10 million at 9:15 a.m. We'd have a different scenario right now.
Oh yeah. I mean, right now in my eyes, it's just at the moment where I like cut myself off from taking any ads on the bounce. And then it's either, you let it squeeze me out or it flops back and then I can just get back to business.
And I think, from the big picture perspective, I feel like every damn degenerate is staring at Bitcoin right now too.
Yeah.
It's like, I mean, if I had to pick a reason why HX is low volume, it's just because everybody's sitting there watching Bitcoin today and nobody's watching this thing. But
Jack, how are you on it? Because I'm nowhere near your numbers, but I was up $1,300 on it, feeling good. And then I'm half me profits back at this point, and I'm like, do I really want to give full gains back? But I'm half me profits back right now. But how are you doing on it?
Such a headache of a trade, honestly. I had a great short sell in the morning, and then no, after the open, I shorted like 2,000 pre-market. I think it's like the 10.5s. Then I got like the rest of my size around like 10.4, and then I was cutting into like the 11 push up into like 11.5 because
good job.
I did cut it. I slapped it. I slapped it way harder right back down where I'm like, oh, that's game.
Nice,
but like the thing about that was, and why I cut it was because it's so illiquid. The halt level was actually 11.68, but the way that they pushed it into the last second of the previous candle, it moved it to 11.85. So like I was still under the impression the halt level was 11.68, which I mean, there's really not much of a difference. I guess I wouldn't have changed me like holding it, but and then the illiquidity. I had a good bit of size, and that's not a hold I want to be in with good size.
Now, a couple more questions. One thing I got, like, it sounds like pretty early on, based on what you told us, you really seem to have like good, like, introspection and stuff like, you were recognizing, again, you were willing to take $20 losses and stuff. Do you attribute that to anything, any like training or like parental, because again, I like to pick on, listen, most 18, 19-year-olds, they ain't taking $20 losses and they aren't looking at it long term.
Yeah.
They're like, I want to go to a party tonight. I want $500 in my account. Just curious if anything in your background kind of led to that.
Okay. Give me the rundown on the question. I actually had to Google introspection. I was like, that's a good word.
You seemed very self-aware.
Okay.
Like you had, in my opinion, talking with you, it really sounded like you understood your psychology. You understood what you were doing. Again, when I was 18, I was basically brain dead. I probably when I was 18 and 19, if you gave me like an IQ test, they'd probably be like, this guy's a vegetable. Okay. Terrible decisions, terrible. The decisions I made at that age. Anyway, you seem level-headed, like you had it together. Again, any opinion on maybe what led to that or anything? Or?
I didn't have it together. I knew one thing. Tim Sykes screaming, "Cut losses quickly. Cut losses quickly." So I had that going. I was just as much of a degenerate as I should have been. That's why I kept bleeding my account down, because I always wanted to trade. But I figured, or I realized, like, when I was like in a play, it would really just start working for me. I never had to really use patience of being kind of underwater. Unlike Roland Wolf, he knows his like risks so well, and he knows how to let like charts form that he could be underwater, but if it's within his risk, he's just going to keep holding. And then suddenly it would just start uptrending again. He'd be selling into new highs. I'm like, what? I was like, who are you? But yeah, it was really just cutting losses quickly, because that's the one thing that I knew I could do.
Right.
Yeah.
And again, it seems so simple. And again, Sykes, people will give him crap about that, because they'll be like, that's all you ever say. But I'm telling you, man, again, him and I have been friends for 15 years. And again, it's like, you just hear this recurring theme. There's a reason he says that over and over again, based on just what I just said. So many people take crazy losses and they're just done. They're done in a month, or done in 3 months. And if you can follow that now, as we talked, you got to do the work, you got to put in the time. But again, if you're blown up, listen, it's like 99% quit when there's nothing in their account. So if you can just at least keep something in your account where you've got something to trade with, then, year later, 2 years later, things start clicking, and then, you stayed in the game. So.
Oh yeah. And even when I was just making like small wins where I make like 50 to $100 a day, I would just tell myself, I'm like, okay, one day that could be like 10 times that, or like 20 times that. I'm like, wow, $2,000 a day, $1,000 a day. That's crazy. So, wow.
So, again, another recurring theme that I've noticed, especially lately, I don't know if I noticed this as much in the past, but a lot of the people I've been talking to, whether it be in the Steady Trade team or like Roland or like you, I keep seeing this recurring of like people with athletic backgrounds. I think it's probably just a lot of discipline is what that is. But have you noticed that? Do you think, you mentioned the lacrosse team. Do you think it had that play into your trading at all or not?
I was I was actually always super big into basketball. Then when I made it to high school, I was like, I'm gonna switch it up. One, because I was going to school with like an all-star national basketball team. So I'm like, I just kind of give up on that dream. I was also 6'1". I'm like, okay, let's pick new sports, football and lacrosse. And man, I was so bad at them. I was so bad at them. I never even knew the rules of football in high school. And I was there on the front line, or just the line, offensive tackle. And then Lacrosse, I was uncoordinated.
Okay.
So I was really not super athletic. Loved to play and I loved to hang out with like the guys because I mean the stuff we would talk about was just hilarious. But I was nothing more than just like the team jester.
Okay. Fair enough.
Yeah.
I was much
I mean,
more into weightlifting and stuff.
Nice. I see Roland's filling out now as well. I've seen a couple of his pictures. He looks like he's bulking up and stuff like that since the last time I
yeah.
saw him. He looks like
He's ready for the winter.
He's gone big in the gym. I can see it. But it like I know it's a basic question, but it's an important one. It's like for the people in the first year, the first 2 years, other than cutting losses quickly, how can they get to the next level? How can they get to your level?
That's when you have to record what you're doing and like the trades you're taking. You know, I even had like a separate psychology spreadsheet for each trade that I took. But on top of like what the actual trade spreadsheet was, it was all about like the profit and loss, your entry, your exit and stuff like that. And then I was just analyzing it with like different boxes throughout of it. Then I would go on to the psychology. Was I having FOMO? Was I revenge trading? Right. All of that, because you really have to understand yourself if you want to make it, because the market, sometimes it's going to feel like it's just targeting you. You know, every single stock you buy, it maybe flops. Or every time you short, it pushes you out. And it's all about maintaining that like kind of higher perspective that we're really nothing much unless we're slinging like $5-10 million dollar positions. We're probably not the main target in these scenarios. Right. Oh, that's a great push.
Yeah.
Yeah, that's
getting your 11 target.
There goes my profits on the day.
Yeah.
I was $1,300 up.
That reminds me of 2015. You know, again, shorting stocks. I mean, it's just like I got to the point where I'm like Bigfoot is like targeting me at this point. So
yeah, there's that illiquid push, you know.
Yeah, it's a sad day.
I think I even said that like 10-15 minutes after the open on HX. I was like, you know, I'm taking a loss right into like the high here just because it's illiquid. If they wanted to really just toy it and push it, they can do it. And it looks like they're kind of doing that now.
Sorry about that. I don't know if you guys can hear that. That was my Roomba. It's stuck on my cord over there. So sorry about that.
Oh, no worries. Good old Roomba. I got a litter robot, self-cleaning cat litter box.
Okay.
It's crazy.
Now what does it do with does it just like put it like you got a little cartridge you empty, kind of like a Roomba or what? So
yeah, just right underneath it. Pull it out. It's already in a bag. Just tie it up and throw it.
Kind of reminds me of that's what I'm doing with Steven when he comes over. So
what is in a box?
So again, HX is very intriguing here.
Yeah, this is popping off. So, all right, there we go. Covered half. Let's wrap this. Had to do it for the halt.
We're all a little distracted here. So, Steven, any last minute questions for Dan here?
Just how does it feel to be a multi-millionaire? That's it. And what do you plan on doing with the money?
Well, I kind of did everything I wanted to do with the money. I bought
by the way,
Audi R8, and then I bought a nice watch, and you know that's kind of just all the plans now. It's more or less just travel. I want to go to like different cities for like a month or two at a time and just try them out.
Nice.
Those are really the big plans from here on out.
Now, what did you graduate college then?
No, I'm actually still in school.
Oh, okay.
I'm doing a graduate program.
What's your major? What's your degree?
Quantitative finance.
Oh, beautiful. Jesus.
Yeah, it's something. A lot of it is
that's awful highfalutin for us penny stock morons.
Yeah, I mean, it doesn't even really.
Us penny stock guys struggle with addition and subtraction. You know, like, what's the one with the 2 lines and the one with the 1 line? You know, it's like that's the extent of penny stock guys.
Oh yeah, I was at the blackjack table in Vegas over the weekend, and she would put down the cards, and I'd be like, I lost my money," and then she'd give me money. I'm like, "Oh, I just misadded it." Oh. I'm like, man, you could have been taking so much money from me all night.
Well, hey, thanks a lot, Jack. And
absolutely, thanks for having me on.
Yeah. Now, one last question. You know, so back to, you know, that your major. I mean, again, do you and listen? I'm not telling anybody out there you need to get a quantitative finance degree, but do you think that has helped trading shitty penny stocks, you know.
The cool aspect of it is that it finally got me to pushed over the edge to finally learn how to program. So
Beautiful.
now I'm actually doing some pretty cool programming with like data that I'm exporting from my
Nice,
trading software.
nice.
Oh yeah, it's some pretty advanced stuff with the volume. That's what I'm saying. I could
Okay.
honestly not even look at the chart. And I
Now
could just
what,
see the
like what
volume.
language? What are you doing that in?
I'm just using Python.
Python. I figured
That's the
Python,
only one
which
I
is-
know.
Yeah, perfect. Yeah, yeah.
Know a little bit of R, but it's more for regressions. But like everything else in this program, it's more like stochastic calculus and then putting some Brownian motion in it, which that's interesting stuff, but it's mainly going to be used for like derivatives and like much more advanced derivatives, like stuff I've never even heard of, like Quanto puts and I don't know.
So
stuff like
where
that.
are you at profits wise?
I
Rough.
don't know. I kind of stopped counting. It's probably close to 3 million or maybe
Okay.
over it.
So do the old man a favor. Okay. I know I'm like the dad of penny stocks around here. So do the old man a favor. You're 23, you made 3 million in penny stocks. Stick with penny stocks, young man. I'm telling you. And again,
Yeah.
I've seen it, man. I've seen it because people and they branch out and they start doing all this wild stuff and options and
Yeah.
futures. And I've seen a lot of bad stuff happen. So make the old man happy. 3 million at 23, roughly. Stick with penny stocks and milk that thing for the next 80 years.
I could definitely do that.
I'll die a happy man. So
I'll do that. I'll keep the derivatives to a minimum.
there you go. There
Definitely
you go.
keep it
So-
there. I like that.
Steven, take us out. So
Oh, and it's been a fantastic interview. It's an absolute privilege and an honor to have you on. It's amazing, such a feat of what you've done at such a young age. It's inspiring, and just thank you so much for coming on. And I hope to chat again in a year or two and see you.
Absolutely. I've been looking forward to that. Thank you guys for having me. This was so much fun.
I hope you guys enjoyed that video. Thanks so much for watching and being part of the Stocks Trade community. We wouldn't be here without you guys. Make sure you hit that like button and subscribe to the channel if you have not already. Our goal is to hit 100,000 subscribers by the end of the year, but we can't do it without you guys. So if you like what we're doing here and you want to hear more, please, please, please hit that subscribe button, and I'll see you guys on the next video.